Well, I'm now very pleased to say I'm joined live by Ireland's Finance Minister to discuss all of this. Brian Lenihan has said that any Anglo-Irish failure could bring down the whole country. So is injecting more cash the only option? Mr. Lenihan, thank you so much for joining us today on the show. First of all, where will you find the extra money to finance this bailout?
Yeah, well, first of all, we are in funds. In relation to Allied Irish Bank, we have a national reserve, a pension fund, so we don't require any fresh borrowing to capitalise Allied Irish Bank, which is a major Irish bank which will be owned in a majority stake by the state, like the Royal Bank of Scotland is in the United Kingdom. So the position at Allied Irish Bank is it will be fully capitalised and transformed and restored into its greatness.
Will you need to seek any outside help?
No, there's no question of that. The sovereign, the state itself, is funded up to the middle of next year. We've done a number of bond auctions in recent months and raised the necessary funds. As far as the banking system is concerned, the cost of gradually downsizing the two distressed institutions of 34 billion will be spaced out over 10 years in annual 3.4 billion instalments, and we're in a position to take that cost.
Mr. Lenihan, I'm here in Brussels where the other finance ministers are meeting. We spoke to the French finance minister who's saying, well, she trusts you to do the right thing and this probably is the right thing. But we also heard from Olli Rehn saying this is huge. It's a huge amount of money. I mean, what do you say to him?
No, but Commissioner Rehn expressed the view yesterday very strongly that Ireland will not need to go into any facility, that the Irish government can do this. And in relation to budgetary matters, we will bring forward a fiscal adjustment plan for the next 4 years to address all of the issues.
So at this point, do you completely rule out seeking support for the EFSF fund?
Yes, because the government is determined to sort out the problems of the Irish economy themselves. We've brought the Irish banking system to a closure in terms of the crisis that it has had since 2006. This brings the crisis to a conclusion because we have finally settled on the definitive figures. The Asset Management Agency has gone into the banks, established what the losses are. We have precise figures on them and they can be worked out over time. That's the position in relation to the banking sector. The Irish banking system is at rock bottom today. It can only revive from now because it is now recapitalised and reformed. The institutions which are distressed will be downsized over time. The viable banks will be in a position to attract funds from the markets with a proper capital base.
But Mr. Lenihan, how sure can you be that these are indeed the final numbers?
I think if you look at the fact that the bank's balance sheets were examined by an independent outside statutory body, very aggressive discounts and haircuts were applied to the loan books, in some cases as high as 70%. We're quite satisfied that these discounts are accurate and reliable, and that this means that the balance sheets of the banks have been restored and cleaned up, and the banks are ready and fit, the viable banks are ready and fit to go back into business.
Will today's announcements be enough to calm investors?
Well, as you know, investors are always very jittery, but I think the steps taken by the government will ensure that investors can rely upon the Irish banking system to be well capitalised and an attractive location for funds. In relation to the Irish state, our fiscal plan will set out a credible pathway to reaching the 3% deficit target by 2014.
Mr. Lenihan, I'm looking at some numbers, and you must be worried about the extent of risk premiums to hold Irish bonds. I mean, when do you expect this to come down?
Yes, the premiums have been very high at the last auction, although over this year they averaged at 4.5%, which wasn't that bad. And we funded ourselves substantially this year to the tune of 4.5%. I think when the market has digested the full implications of our bank plan and when our full budgetary measures are outlined in November, the markets will have every confidence that Ireland is on a sustainable financial path for the future.
When do you expect the bond market to stabilise a little bit?
Look, I can't predict the bond markets. I can tell you what the government is doing to restore Ireland's position and put ourselves on a sustainable path. In relation to the financing of the state, we have agreed a Stability and Growth Pact with the authorities in Brussels, with the Commission. We have always met our targets under that plan. The plan will require revision and we will meet the revised targets. To date, we've been very consistent in meeting our targets. We've been widely commended for doing that. We'll continue to do that. In relation to the banks, we have brought finality, closure and certainty to the exposures in our banking system. And as I said already, our banks are now in a position where they are capitalised and in a position to attract funds from overseas.
And Mr. Lenihan, I do understand it's a very difficult question to understand exactly when you expect the bond market to stabilise, but you've decided to cancel the October and November debt sales and wait until next year. So are we going to have a bit of a respite from the beginning of next year?
Well, look, the position is that the state is well funded to the middle of next year. We have sufficient funds raised already this year, therefore. Given the very high premia the bond markets were looking for, we didn't believe it was affordable for us to have auctions in October and November, and they have been cancelled. And we will be back in the market in January.
How realistic is it, your plan to narrow deficit to 3% by 2014 when we don't really know if Europe will go through a double-dip recession yet?
Well, I don't accept that Europe is going through a double-dip recession. There's been very robust growth in Germany, and the figures in many of the other European countries are positive as well. There's no suggestion of a double-dip recession in Europe, and I've seen no evidence for it.
Mr. Lenihan, thank you so much for your time. The Irish Finance Minister speaking to us live from Dublin.